Well, welcome back to All Day Live. Thanks for hanging out with us at here. What time is it? 12:16-ish. Thank you for spending your afternoon with us. Okay, so if you have been following the stock market lately, of course you have noticed some pretty big swings and mostly some big drops. It has probably been a topic of conversation within your family. The Dow has dropped about 2,000 points since the first trading day following the first military strikes in Iran. So we want to just kind of sort out some of this when it comes to the stock market. So joining us now to help us just kind of put all of this into perspective and context is Jason Brown of the Brown Report and also the author of 5-Year Millionaire. Jason, thank you for your time.
Simone, good to be here. Thanks for having me.
Yeah, let's talk about what you are seeing through your eyes. I would love to hear this from, the markets over the past 10 days or so, because we have dropped significantly.
Yeah, and so first thing I want to say is I think people need to zoom out and look at the big pictures. I was just looking at and getting the official numbers before coming on here. Mm-hmm. If you look at the Dow Jones Industrial Average, we're actually still up 10% year to date. And when you look at the drawdown that we had, we're down about 7% since the war and different things like that broke out. So sometimes when we zoom in microscopically, it feels like the sky is falling, but when you zoom out a little bit, you realize we're still up 10% year to date, and that's still pretty good on any portfolio. Same with the S&P 500. Year to date, we dropped 4%, but year to date, we're just down 2%. So when you think about it on those bases, it's not that bad. Obviously, anytime there is something like a war or inflation, basically anything that causes uncertainty, people start to panic, people start to ask. When I say people, I'm thinking about investors, I'm thinking about traders. They're asking themselves a couple different questions. Where am I going to lose money and where can I make money? And so people start to move money around and say, okay, if prices are going to go up because of oil, who's going to be the winners and losers of that, at least in the short term, the medium term, and how do I capitalize on that? But when you look at something like a COVID-19 and you zoom all the way out, even when the world was shut down, we rallied back over 200% from the bottom of COVID-19. So long term, one thing that we can bet our hat on or stake our claim on is that wars, pandemics, things like that, they don't last forever. Although when they do come here and stay for months or a year, it feels like a lot of pain in our portfolio. But if we can zoom out and think long term, they don't last forever and we usually recover from it.
That's a good way to think about anything. I feel like anything in life. If you could just zoom, that's a good perspective, I guess, to have. Jason, let's talk about, because you kind of hinted at it there, looking at things for the future, right? Of course, you're no psychic. We can't see long term. But do you think we could expect more of this to kind of just continue in the next coming days and maybe even weeks at this point?
Yeah, the thing about the stock market is anything could change at any moment. So when you look at the information that we have right now, we know that oil went as high as about $125 a barrel today, and it's back down from that. I think it went back down to like $90 a barrel, something like that. When you look at the volatility index, and we couldn't get a picture of it up, but when you look at something called the VIX, the volatility index, if you have any type of stock trading software, you can type in VIX. Basically, the VIX is the volatility index of the S&P 500. That just simply means it measures fear. How fearful our people are about how quickly they're selling their stocks, how fast they're buying, how much volatility there is. The VIX spiked to about 36, which is within a range of normal. Now, just to give you an example, just so that people have something to reference, if you go back to the pandemic, VIX was as high as 96. So that was the height of people's fear, scared, get out of these stocks. The world is shut down. We don't know what's going to happen. The VIX recently went to, like I said, 36. So 36 versus 96. So we're nowhere near close to that range of panic. And it's already backed off from that level. So what I'm trying to tell you is we've kind of hit, at least for now, the maximum amount of fear as it relates to oil and the war. The VIX is right now at 26. So we're already 10 points. Think of it like this. We're already 10 points less scared or fearful than we were a couple of days ago when all of this stuff started to unravel. So as of right now, I don't see more selling off in the future, but any new news can come out. The war could get escalated, someone else could join, a new ship could blow up, and obviously that's going to spike fear and people may react. But with the information that we have at hand, it appears to be baked in.
Yeah. So it sounds like the panic mode has hit its peak from what you were saying. And for you, I'm interested, looking through your eyes, what are you looking at and tracking every day?
So one of the things that I look at, and I would encourage, anyone who's interested in investing to look at, is I typically keep a handful of stocks that say, hey, if they get to this price, I would be very interested in it. If I missed the run up on Nvidia, if I missed the run up on Microsoft, if I missed the run up on some oil stocks or some infrastructure stocks, anything that might be just getting wrapped up in regular news and selling off, but they don't really actually have anything to do with oil, I'm looking at those and saying, hey, where would I like to buy this at? Because it's still a good company like Apple. Apple was selling off today. There's no real direct correlation to Iran. They don't get chips from over there. They don't manufacture phones over there. They don't need necessarily oil to build the iPhone. Although you could argue the factories might need the heat and different things like that. I get it. The truckers bringing the equipment in. They need gas, oil, stuff like that. But big picture, a company like Apple, I'm looking at that selling off and I'm saying I would like to own it at this price as it starts to pull back. I'm looking at companies like Palantir, who creates AI software for the government and the commercial segment. Again, doesn't really have much to do with the war in Iran. And so I'm looking for companies, one that most people may be familiar with is Walmart. Walmart has sold off to its 50-day moving average. Not really going to be affected. Yes, they have some trucks delivering stuff on the road, but big picture, you're still going to buy toothpaste, toilet paper, deodorant. You're still going to shop online. So companies like that, Amazon, you still want to keep an eye out to buy them at potentially a discounted price so that when the smoke clears and the news headlines clear, these stocks start to move higher.
And I guess just as for, some of the people who may not know too much about that, some people like you get deep into it, right? And you track the numbers and all of that. But many of us are not like that, right? So we just try to figure out, especially if you're a beginner, where do you start? And when you see stories like this of, okay, could be a good time to buy here. And as you mentioned, places like Walmart, where does our research start though? In that. So,
luckily my company exists, and I'm probably sure a couple others that teach and share about this. But at a simplistic level, I would just encourage people to just think about it from a simplistic level. When the markets are at all-time highs, when you buy at an all-time high, in order for you to make money, it has to go even higher. It means it has to go somewhere it hasn't been before. When the market retreats from all-time highs, we know it can get back to there had this event not have happened. So just think about, can I add more money to my 401k? Can I add more money to just the S&P 500 fund, which is the SPY? You can buy an ETF. Can I buy a Dow Jones Industrial Average equivalent, whether that's individually or in my retirement account, or add more money to my 401k now that things have pulled back? That's just a simple way to look at it. But you can also just look at the things that, the places that you do business with. Most people do business with Amazon. They do business with Walmart. They have an iPhone. If they don't, they have a Google or Android. So start to look at some of the ticker symbols of the companies you do business with and say, what was the price 2 weeks ago before all this started? And where is it at now? And one thing you can be assured of is you're not buying it at the highest price if it pulled back. And if nothing else outside the business changed, then it's still a good company. And once the smoke clears with this, because again, this won't last forever, then you'll be part of the people that participate as the stock starts to turn around and head up.
Yeah, that's good information to have, because all of our situations are different, right? You have people who are retiring maybe tomorrow. You have people who are in college, or, everyone's financial situation is different. So some great information, Jason. We appreciate your time.
Yeah, thank you for having me, Simone. I appreciate you.
Thank you, Jason Brown, stock market expert.